Welcome back to Big Deal. We have with us Jayanta Basu of CX Partners. Jayanta, always a pleasure to welcome you on CNBC TV18.
Thank you so much, Nisha.
So how's the investor environment and sentiment looking around the startup world, Jayanta? I want to do a status check on the winter of the funding that we have seen, the valuation drop, and many companies facing many troubles because of liquidity really being sapped out of the system.
Now, I think what's happened is that the investor has become a little more particular about what he's going to invest in. He is no longer sort of, getting carried away by valuation or pyramids in terms of creating these, pack of cards. But I think what is happening is that a good model will still get enough investments. And we're seeing that happen across the board.
So while a lot of companies are struggling right now, Jayanta, you think that buyout opportunities are also quite a bit in this particular space? What's your thought?
But in terms of mature businesses, yes, that's you can see a lot of buyouts happening. Clearly, the buyout funds are very active. You're seeing across sectors, where people are putting in some serious money and buying out and rolling up companies.
Right.
And that's happening in the IT space, it's happening in the healthcare space. You've seen a lot of the API companies actually sort of getting consolidated for a period of time. So I think there is a huge opportunity which is there. And also people, in terms of entrepreneurs, are looking at it and saying that, yes, there is a way to create value.
Right now. And also for venture capitalists and for the investors, do you think it's a tough time? And is it going to be prolonged? When you look at your own portfolio, what's the view that you get?
Yeah, in terms of the venture capital businesses, or should we say quasi-venture capital businesses, we are seeing that there is a need to prove your business model.
Yes.
You need to be able to prove that there is a route to profitability. No longer is it saying that I will get market share. It is important to actually show the investors or the future investors that there is a way where the unit economics make sense by themselves. And no longer, should we say, just creating market share and then saying that hope that everything will fall into place and the money will start pouring into the business. I think so that's a mindset change. On traditional businesses, I think the Indian economy is growing. I mean, I'd say we've got tailwinds like there's no tomorrow. And I think we should actually capitalize on that significantly.
Right. And when you look at your portfolio, I want to understand, what is the sense that you get? How many could really make it really big in the next few years to come?
I'd say every one of them.
That is wishful thinking.
Not wishful thinking at all. I honestly believe that all the companies that we have currently have the potential to make it big. As long as they as they follow the process, are actually focused on the line that they've taken on the opportunity set which is available, and don't drift. If they start drifting, if they start pivoting into areas which really doesn't make sense, and make wrong capital allocation decisions, then they will falter. But otherwise, the tailwinds is significantly, and will make sure that all of them can scale significantly.
Right. So, Jayanta, at the moment, how are you seeing most of the attractive propositions that you are going through? The valuations, have they sobered down? And are there any green shoots also seen in the overall sector and the investor sentiment?
Well, in terms of valuation, I think that valuations vary. You just have to be disciplined. I mean, we look at many companies pretty much on a daily basis, but we make sure that we have pricing discipline. As long as you can keep to that discipline, you will find companies which fit both in terms of price and value, and you choose those companies and invest behind them. And I think it's very important to do that because otherwise it tends to catch up subsequently. In terms of green shoots, again, I come back to my original point. I think we are in a position where most of our industries are in good shape. We have the government policy which is backing us. And we believe that in terms of growth, pretty much every sector is viable today and to outperform global markets. And you just need to pick the right management team to be able to lead it.
All right. So you sound quite bullish. There are two important aspects. And since you're an industry expert, you've seen companies and sectors across the board through various stages. What do you think about the probabilities and possibilities of some of the startup or tech-based companies making it back to the IPO market? Do you think that possibility could come and there is market acceptance?
It will come in due course. I think there needs to be a bit of a catch-up. People need to take a deep breath, understand that the value proposition is no longer what it used to be. It is no longer a hypothesis of infinite valuation.
But that the investors community also has to understand.
I think it's an investor community. Which the signal is very clear, right? Well, the investor community has been told, and the managements have been told that if it's not at the right valuation, there will not be a secondary market for it. You can, in the greater fool theory doesn't exist beyond a particular point.
Yes.
So I think people are now becoming much more sensible. You will see, companies are scaling up.
Yes.
Companies with fundamentally strong business models will be able to list. Maybe not in the next 3 or 4 months, but in the next 6-12 months, I'd see some of these companies actually maturing enough to be able to actually.
So, as we speak, some of them are really dressing up.
Yeah, so it takes 6 to 12 months for them to actually hit the market. So they are getting their fundamentals in place, and in next year, 12 to 24 months, you'll see them listed.
Another big trend that is really developing in this startup space or unicorn, decacorn space is the debt concerns. And, multi-billion-dollar valuation companies have really got a knock on their valuation and completely wiped out their equity value because of small portion of debt. How do you see this scenario? What are the solutions for this?
There are no solutions. There will be companies which will go under. I mean, let's be, if the debt is to a point.
There will be casualties.
There will be casualties. And I think this is part of the learning process. Every economy goes through this. Every investing cycle goes through this.
Yes.
When animal spirits sort of run wild, you leverage up. You think you can outgrow the market. When the fundamentals collapse, then it just hurts. So you have a set of investors who can actually back that, will take the hit, but at the same time, there are other companies who've just done phenomenally well.
Yes.
So on an overall basis, from a portfolio basis, they'll still do very well.
Yes.
But yes, some of these companies need to also die. Honestly, if they've actually been, they haven't understood their balance sheets well enough, they probably need to just die for that as a lesson to others, following in their footsteps.
Thank you so much for joining us.
Thank you, Nisha. Thank you for having me. Thanks.
And with that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.